Good evening, investors. Welcome back with me, Madhavi, on KleverStock, serving you the latest updates for the closing bell this evening. Kicking it off with evening updates from our local bourse. Persistent buying support led by heavyweight banking and plantation stocks kept Bursa Malaysia comfortably higher at mid-afternoon, lifting the benchmark index past the 1,720 psychological threshold. The buying momentum was spearheaded by strong moves in Public Bank Berhad and SD Guthrie Berhad, helping the market sustain its positive trajectory from the opening bell. At 3 p.m., the FTSE Bursa Malaysia KLCI advanced 10.35 points to 1,724.11 from Wednesday's close of 1,713.76. The key index had earlier opened 3.0 points better at 1,716.76 before climbing steadily as institutional interest picked up throughout the session. Despite the strong gains in the main index, underlying market breadth remained soft as profit-taking in mid and small cap stocks kept decliners ahead of advances at 524 to 485. Meanwhile, 489 turnover standing at 2.37 billion units valued at 1.53 billion ringgit. The financial sector provided the primary engine for the afternoon rally, with the financial services index jumping by 126.68 points to 20,283.07. Public Bank served as a major driver, rising 11 cent to 5 ringgit 16 cent, while Malayan Banking Berhad Maybank also lent solid support by gaining 6 cent to land at 11 ringgit 2 cent. The plantation sector also enjoyed a strong afternoon performance, with the plantation index surging 50.42 points to 9,489.38. This advance was anchored by SD Guthrie, which added 12 cent to reach 6 ringgit 74 cent, alongside United Plantations Berhad, which advanced 20 cent to trade at 34 ringgit 90 cent. However, other major blue chips faced moderate pressure. Utilities giant Tenaga Nasional Berhad shed 8 cent to hit 14 ringgit 30 cent, while healthcare operator IHH Healthcare Berhad decreased by 6 cent to 8 ringgit 56 cent. Among the day's top gainers, Petronas Dagangan Berhad led the pack by garnering 26 cent to reach 19 ringgit 58 cent, followed closely by IOI Properties Group Berhad, which increased 15 cent to 3 ringgit 92 cent, and Petronas Gas Berhad, which climbed 14 cent to 17 ringgit 76 cent. Conversely, the technology and manufacturing sectors saw notable pullbacks, with Malaysian Pacific Industries Berhad leading the decliners by falling 92 cent to 44 ringgit 82 cent, while UMS Integration Berhad decreased 30 cent to 8 ringgit 1 cent. Actively among the day's most heavily traded stocks was mixed. Tech firm NationGate Holdings Berhad jumped 18 cent to 1 ringgit 15 cent. VS Industry Berhad added 1.5 cent to 23.5 cent, and Dagang Exchange Berhad ticked up by 2.5 cent to 47 cent. On the losing side of the active list, property developer Tanco Holdings Berhad eased 1 cent to 30.5 cent, and Trivin Global Berhad lost 2.5 cent to close the afternoon stretch at 9.5 cent. Now for some local news developments. The government has officially launched the sixth phase of the large-scale solar program, a massive clean energy initiative projected to mobilize between 13 billion ringgit and 15 billion ringgit in private sector investments. The Ministry of Energy Transition and Water Transformation stated on Thursday that the latest rollout forms a common cornerstone of the nation's ongoing economic strategy to accelerate the green transition and aggressively expand domestic renewable energy generation capacity. The newly unveiled framework introduces a total quota allocation of 2,500 megawatts of solar capacity alongside a mandatory 1,250 megawatt of battery energy storage systems, which function as large-scale utility batteries designed to capture surplus electricity and discharge it during peak demand on ensure to grid the reliability. The government has structured the rollout across 3 targeted operational packages, including a dedicated 150 megawatt solar allocation specifically reserved to boost the participation of Bumiputra enterprises in Peninsular Malaysia. To ensure maximum structural impact of development, priorities are being shifted toward high-growth economic corridors. The ministry noted that project development will focus on strategic areas with high electricity demand growth, particularly in the southern region of Peninsular Malaysia, where large-scale solar plants will be developed in hybrid form with BESS. Under the modern guidelines, individual developer capacities are strictly capped between 60 megawatt and 500 megawatt for the initial 2 packages, while the standalone Bumiputra package accommodates smaller operations ranging from 10 megawatt to 30 megawatt. The massive solar pipeline will be distributed systematically across the energy market. Package 1 function as an open tender available to all global and local developers, distributing 200 megawatt of solar capacity paired with 1,100 megawatt of storage. Package 2 operates as a specialized open tender for Bumiputra corporations, delivering 300 megawatt of solar capacity alongside 150 megawatt of storage infrastructure. Lastly, Package 3 establishes a dedicated 150 megawatt Bumiputra solar program that excludes battery storage dependencies entirely. Beyond upgrading nationwide grid infrastructure, the rollout acts as a primary catalyst for job creation and emissions reduction. The development and construction phases are forecast to generate between 15,000 and 20,000 localized employment opportunities, while permanently cutting annual carbon dioxide emissions by an estimated 2.6 million tons. The entire grid expansion will be deployed progressively, with all winning installations legally required to achieve a full commercial operations no later than December 31, 2029. The bidding window is scheduled to open imminently, and the Federal Energy Regulatory Headquarters in Putrajaya, the ministry, confirmed that the request of proposal documents will be available at the Energy Commission headquarters from July 27 to August 7th for packages 1 and 2, and from August 17th to August 28th for the package 3. Now continuing with some economic news. Malaysia's consumer spending is on track for a strong expansion in 2026, driven by a resilient domestic economic baseline and a highly favorable employment landscape. According to a newly released market report by BMI, a Fitch Solutions company, household spending is projected to grow by 4.2% year-on-year in real terms, pushing total expenditure to 1.10 trillion ringgit at 2010 constant prices. This anticipated milestone positions domestic consumption well above the pre-pandemic benchmark of 779.7 billion ringgit recorded in 2019. The research firm attributes much of this momentum to structural strengths within the domestic workforce, pointing out that an intensely competitive job market is driving wage improvements that outpace living costs. BMI stated in its analysis, additionally, the country's tight labor market will support spending, with real wage growth forecast to comfortably outpace inflation and underpin purchasing power over the year. Looking slightly further ahead, the research house notes that this trajectory will sustain its upward path into 2027, with household spending expected to advance at a real rate of 4.1% year-on-year to hit 1.14 trillion ringgit. Despite the positive overarching trend, the report balances its optimism by highlighting significant financial constraints that will likely prevent a more explosive consumer boom. High levels of household debt paired with substantial debt servicing costs continue to absorb a large share of family incomes. Consumers seeking immediate relief from borrowing costs will find little change on the horizon, as Bank Negara Malaysia is widely expected to keep its benchmark overnight policy rate anchored at 2.75% throughout the course of the year. On the broader macroeconomic front, BMI forecasts Malaysia's overall economic growth to average 4.3% year-on-year in 2026, followed by a slightly moderated but stable real gross domestic product growth rate of 4.0% in 2027. The nation's structural position as a net exporter of energy serves as a critical differentiator from its regional neighbors, providing a reliable stream of export earnings to shield in the wider economy. However, these energy revenue dynamics will concurrently trigger tighter domestic fiscal policies. The research house anticipates that stronger petroleum-related revenues and dividends from state energy firm Petroleum Nasional Berhad will offset escalating government subsidy bills and reinforce a broader political commitment to fiscal consolidation. Consequently, BMI notes that this means that fiscal policy will be contractionary, decreasing household disposable income. The cornerstone of their consumer outlook remains the stability of the local job market. Unemployment is projected to average a low 3.1% of the total labor force across both 2026 and 2027, buoyed by a robust inflows of foreign direct investment, a recovering international tourism sector, and steady production gains across key industries like manufacturing, electronics, and agribusiness. Nevertheless, BMI cautious that the local conditions remain sensitive to international shocks, warning that should economic conditions worsen in the market, for example, if growth is maintained in the mainland China slows even more than we currently expect, there is a risk of elevated unemployment, which will quickly feed through a weaker consumer outlook. Moving on to the corporate front. Engineering services firm iSense Group Holding Berhad has expanded its local commercial footprint after its wholly owned subsidiary VC Engineering Sendirian Berhad clinched a 12.9 million ringgit contract to renovate a mixed-use industrial facility in the Klang Valley. The contract marks a significant addition to the group's order book within specialized engineering ecosystem. In regulatory filing with Bursa Malaysia, the company confirmed that VC Engineering formally expected and accepted a letter of award issued by the Malaysian corporate subsidiary of an established Netherlands-based technology multinational. The Dutch counterparty specializes globally in highly specifications sectors, providing system for the semiconductor, medical and life sciences, and infrastructure and energy industries. The comprehensive corporate upgrade is structured of an aggressive timeline and must be handed over to the client rapidly, with the entirety of the project scheduled for completion within 4 months. According to the company's exchange filing, the scope of the works is comprehensive, covering the baseline infrastructure all the way through the specialized mechanical integrations. iSense noted in its official public statements the total contract value of the letter of award amount is 12.9 million ringgit, exclusive of sales and services tax, detailing that the responsibilities comprise, among other, the supply, delivery, and installations of building works, internal finishes, mechanical, electrical, extra low voltage systems, plumbing, sanitary, fire fighting systems, and testing commissionings works. The win reinforces of the group's strategic positioning as a provider capable of meeting the stringent requirements demanded by modern high-tech operators. Commenting on the corporate milestone, iSense Executive Director Fu Xiangleng highlighted that the broader long-term benefits of the arrangement for the company's industrial reputation. He noted that the contract broadens its project portfolio, while adding that it also underscores customers' confidence in the company's ability to deliver integrated engineering and construction solutions for technology-driven industries. Rounding off today's closing bell with banking updates. National Mortgage Corporation Mas Berhad has achieved a significant milestone in global Islamic finance by successfully executing Malaysia's first ever Islamic medium-term notes and Islamic profit rate swap transaction tied directly to the Malaysian Islamic overnight rate. The dual-track transaction features a 300 million ringgit 1-year MYORI reference sukuk alongside a 100 million ringgit 5-year MYOR. IPRS established a crucial foundational framework for the country's alternative reference rate ecosystem. Developed strictly in accordance with international principles for financial benchmarks, MYORI stands uniquely as the world's first transaction-based Islamic benchmark rate. The historic issuance marks the first time that both the broader Malaysian capital markets and Chagamas have priced Sharia-compliant debt instruments against this specific mechanism. Utilizing the concurrently executed IPRS as a primary hedging tool for the capital arrangement. The corporation plans to aggressively channel the funds generated from the bond market back into the core domestic banking system. Proceeds stemming from the dual issuance will be completely developed to purchase eligible financial assets directly from existing financial institutions. This operational deployment fits cleanly into the state-backed corporation's foundational mandate to enhance ongoing liquidity flow and protect overall financing availability across Malaysia's broader residential, housing and financial sectors. The structural shift aligns with the central bank targets to move the financial sector away from the legacy estimation formulas to transparent actual transaction metrics. Bank Negara Malaysia's initiative towards a more transaction-based rate-setting framework and advancing innovative in the domestic sukuk market. He also noted that the benchmark achievement highlights how the group remains prepared to adapt to the new market dynamics, adding the transaction also demonstrates Chagama's readiness to operate in an evolving alternative while continuing to deliver innovative Sharia-compliant market solutions. The 300 million ringgit 1-year floating rate note was jointly organized by Investment Bank Berhad and CIB Investment Bank Berhad, serving as appointed lead managers, whereas the matching 100 million ringgit 5-year hedging transaction was formally executed with CIMB Islamic Bank Berhad. He also mentioned we are encouraged by the strong support received from our banking partners, which reflects their continued confidence in Chagama's credit strength and strategic role within Malaysia's financial ecosystem. And that's a wrap for closing bell updates with me, Madhavi. Thank you, investors. We shall catch up in the next session soon. Goodbye.